All right, we got it recording. All right, hey guys, this is the Buckeye State Investors Club group, whatever you want to call it. We meet every other Wednesday at 8:30. We also record this so it can go on YouTube, go on Facebook to where you guys can see it. I host this show, this meeting, myself, Ryan Gillen, and then with Kara Ray as well. And we want to bring new investing information to you every single other week, every single month. Something that's new that makes you get to think, how can I invest better in Ohio? Last week, we talked about fix and flip loans. We're going to go into that a little bit further because we had a lot of people ask us questions about that. We actually even had a few people that took advantage of it over this past couple of weeks as well, once they heard about the program. So we're going to dive into that a little bit further, but then we're going to dive into a couple other questions that we had from investors throughout these past couple of weeks that we figured that we would answer to you because it's very common right now. The only thing that we know about investing that is constantly changing. What worked maybe 6 months ago or what was a good product to buy 6 months ago might have changed. So even just a little bit about the market right now, it is moving and it's moving very, very quickly. We saw in the month of November, even for new construction, the average new construction price was cut by 6%. So it'll be interesting to see if that trend continues because there really might be an opportunity to invest maybe in new construction as well as these prices get slashed. I always say the months of November to February are the best times to invest in Ohio because it's the most opportunity. There's a lot of people that sit on their hands, they go on holidays and whatever it may be. So there's products that sit on the market, and there's also less competition of investors that are trying to scoop up these really good properties. We definitely know of a couple right now that Kara and I are looking at in the great state of Ohio. So, Kara, let's jump right in. And what is the what was like one of the first questions? What was like one of the biggest questions you had this last couple of weeks from our clients?
Yeah, so talking about the fix and flip, a lot of people were curious if you have to start up an LLC in order to get the fix and flip loan.
I feel like that would be an Andy question on that one. So, Andy, go ahead and take it. Andy, introduce yourself so people know who you are
Yeah.
and what you're about. Yep.
So I'm Andy Payne. I'm the owner of Elite Capital. I'm just stepping in for Kelsey today. She's always still your go-to. But to answer the question, yes and no. So you can do the fix and flip loan under your own personal name. However, it vastly limits the amount of investors we can go to. So it may limit kind of how we talked about last week, how you can have the potential to have 0% down or the potential to do 10% down and fund the whole rehab. There's a lot less investors that will allow you to do it in a personal name versus the LLC. So just some of those cooler terms or some of those lower barrier entry terms might go out the door if you want to only do it in your personal name. So I would answer that question and say it's always worth it unless you are absolutely against it, if that makes sense. Mm.
Yeah, for sure. And another thing I talked about with my clients as well is it's probably not a bad idea to start that LLC and then create a bank account within that LLC so you can keep those funds completely separate, when you do need those renovation costs. So just something to think about as
Yeah.
well.
And the reason to really start an LLC is to limit your liability, which is LLC. And
Right.
so at the end of the day, if you can separate your personal assets from your business assets the most, if when or if shit hits the fan, you're protected even further because they're going to look and they're going to see total separation between your personal life and your business.
Well, and
For
correct
sure.
me if I'm wrong, Ryan, but when you talk about first-time investors, some people think there's a lot more to opening an LLC than there actually is. It's
Yeah.
really not as hard as a lot of people think it is, especially if you have somebody that have done it before. They don't even have to do it for you, but they can walk you through it in a matter of
Yeah.
minutes, usually.
It's 300 to like $800 to open up an LLC. Just depends on who you use. If you have a partner, you need bylaws or whatever it may be. It's not overly expensive, but I mean, I personally suggest it. So,
For
so
sure.
yeah, yeah.
So the next question was once you find a property, what are kind of like the next steps, Andy? If you could like walk us through that, what that looks like, and more importantly, The clients wanted to know as far as, those renovation costs, do they need to have a breakdown of what repairs need to be done to the property prior to submitting an offer, or can that be done after?
It's a great question. As far as like finding a property, I feel like you're going to lean on your real estate agent or somebody that knows the market a little better than us specifically. But then when you have a property, we really just need the renovation number. So we don't really need the line item breakout for like the initial numbers or the initial, hey, this is what we can do off of it. Now they are going to ask that right after, because even though most of these loans don't do full appraisals, they'll use different companies like Richer Values, or there's a few others where we have to input those renovations into kind of the AVM that way, which is like your after repair value. And the reason we need to do that is just so we make sure it stays in line. So if we just say, hey, we're going to put 80 grand, they don't know what we're doing. But if we list out, we're going to redo the bathroom, we're going to redo the kitchen, we're putting these style fixtures in there, that's where we can get our ARV where it needs to be in order to do the loan.
And I did have a question from a client yesterday that I showed that's looking to do this fix and flip loan. How do you guys loan the money out? Is it in installments or is it all at once?
So it's not all at once. I've almost never seen it all at once, but I've seen two different
Yeah.
ways, and it really just depends on the property and qualification. One, they will actually front up to 24% of your total rehab amount, and then you have to have an inspection to show that that work was done, and then they'll do another one, so on and so forth. Most of them, though, you have to float your draws. So even if you got in at 0% down, you may need to do all the demo work, do all the first stage of the rehab, and then ask for a draw where usually they either send somebody out to take pictures or let you take pictures, prove the work's done. Sometimes if you're like bought an HVAC system but it's not installed, you can show the receipts. But most of the time, this is a pay for and get reimbursed system, if that makes sense.
Yeah. 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 Absolutely. Absolutely. Appreciate that answer.
Yes. Okay, so going on to other questions, not necessarily fix and flip related, but I wanted to run through a scenario because I had a client that was interested in a multifamily, and it was a 4 unit. Three of the 4 units were rented and they were occupied. So we couldn't go in. They didn't want, us to bother the tenants. So 1 unit was vacant. And, my client was a little nervous, how can I make a decision based off of 1 unit when I can't view all four? So I wanted to touch on that because there are ways that we can protect our clients and make sure that they secure the property and they can view the units later on. But it's important that we get under contract and we can write in a contingency. So that contingency can be, satisfactory walkthrough within so many days after getting an accepted contract. So I think that's very important to let other investors know because we are seeing a lot of multifamilies that are very good properties that are cash flowing right now, and it might just be a little tough to get in. What are your thoughts on that, Ryan?
Yeah, I think what's important to understand about that is like you're going to have a due diligence period, and we're going to protect you to where if you get under contract, you're going to be able to walk away from that contract if you're just not feeling good about the property, or maybe the other 3 units are just not in the shape that you want it to be, or you looked at the lease agreements and they're just a hot mess, and you don't feel like dealing with it. The problem is any property that comes on the market that is worth it, any property that is on the market that is worth it is going to go quickly because there's other investors that are waiting for those deals where numbers really make sense. And so if as a listing agent, if I list a multi-unit and I get 3 or 4 offers and I've gotten 10 agents calling me, the agent that calls me and says, I have a buyer and they want lease agreements, they want rent rolls, they want utilities, they want to see all 4 units tomorrow. It's like, it's probably not going to happen in 24 hours. And we're probably going to accept an offer before you even get time to do your full due diligence period. So it's better just to go ahead and see if you can work the numbers out for the knowledge that you have, get it under contract, and then go through your due diligence there and make sure the property works for you. I feel like if you continue to try to have everything perfect and have all the information, you're probably going to end up losing out on a lot of the good properties, because the good properties will go fast regardless of what market you're in.
For sure. And
Yep.
when you talk about running the numbers, because a lot of
Yeah.
clients, want to figure out the best, the easiest way to run numbers, I always
Yeah.
tell clients that let's work backwards. So let's run the rental comps, if it isn't currently rented. Um, and then let's look at the monthly payment. So we can always send it out to a lender and see, hey, what would the monthly payment be on that? Like Andy, you can talk on this too. Like, does it ever bother you when people send over a property and they just ask like, hey, can you run the numbers really quick on this?
Absolutely not. No, I think lenders, most of the time, all we get done is calling agents and calling people to try to get that to happen. So that's kind of like the first little rewarding piece that comes back from what we do. So reach out as many times as you want. We never get annoyed by that for sure.
Yeah, I would think it's important just to know, when that raw number's in front of you with principal, uh, interest, taxes, insurance, all included in there, you can really see if the numbers are going to work really quickly. And then do you have property management or not? You're just kind of plugging those things in. You should be find out very quickly before you even go out to the property, like, is this property realistically going to work? Or if it's not going to work at that price, where do we need to get it down to? It's rather simple, but using your resources quickly and jumping on a property quickly is the difference between winning and not winning in this business. Because if that perfect property comes up, you're not the only one that sees it. So it's definitely good to be decisive, have that team around you, but also make sure you're protected in those, um, you know, with those contracts. And that's our job, to make sure that you have 3 or 4 outs throughout the contract.
For sure. And
Yep.
also touching base on like what is important when you're a new investor. I think
Mhm.
it's really important to have a great crew behind you. If that's a trusted handyman, contractor, if you have a property management company, if that's the route you want to go, make sure you already have that in place before you purchase a property. Or
Yeah.
if you don't have that, then get a great lease agreement that covers you and get a great real
Yeah.
estate attorney.
So
I
I would say, like, the biggest thing that I see between new investors or young investors compared to experienced investors is the experienced investors know the game. They understand the game. They understand um, all right, let's get this thing under contract. Let's do the inspections. Let's do the due diligence period. Like, they don't feel handcuffed. They understand how to play the game. And the new investors, the young investors, they wait for the perfect scenario to fall in their lap, which never happens. This isn't 2013 anymore, 2014 anymore, where you could literally drive down the street and point at any house and be like, "Yep, the numbers work for that." That's not that's not this world anymore. So those perfect scenarios rarely exist. You kind of have to make those scenarios happen. And I think the experienced investors, one, they're super decisive. They know what they want. They see the product. They're able to pull the trigger quickly, and they're able to protect themselves appropriately. But they're able to pull that trigger, get that property under contract, and then kind of go from there. The inexperienced investor will want to see it 2 or 3 times, really think it over, do all this kind of stuff. Which the numbers don't change, the product doesn't change. The only thing that's changed is more competition coming in.
Can I
I
play
think,
out a scenario to
yeah,
piggyback on that with you?
yeah, and then Grant Flood is our Columbus team lead. So if you ever have any needs for Columbus real estate or Columbus investing, uh, Grant is the guy who you'd call.
Yeah. So I just really want to quickly touch on, because I work with a couple of investors, one primarily who you actually met at the client event, Ryan, Paul, and but I don't ever represent the sales side of them because he's a holder. And so my question is that from the presenting of an offer standpoint, if you were on the other side, we typically, when we see something that horseshoes and hand grenades is going to work by the list numbers if it's a new listing. We typically slap down a list price offer, no inspections, contingent on a satisfactory walkthrough of all units, a satisfactory review of the rent roll and utilities and blah, 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 just to get it under contract. And then I'd say 50% of the time we terminate after seeing all the units. A quarter of the time we renegotiate the price. A quarter of the time we stay with the contract we offered because everything's nice and buttoned up and good. From the seller's side, like if you were an experienced agent on the seller's side, is that the kind of offer that you're open to seeing on day one, knowing the potential ramifications?
Yeah, it all depends on if you only have one offer, then
Right.
that's fine. If there's a
Yeah.
multiple offer situation and maybe yours is the highest price, we're gonna ask questions like, hey, is your client experienced? Does he know, does he have other properties? The person I'm most worried about is writing it, which we always write, contingent upon satisfactory review of all the units and the lease agreements. That's perfect. But the person I'm most worried about is the inexperienced buyer that when the agent goes, well, they're just super excited to buy their, first property, and then they want to see all of the other 3 units, and something's going to freak them out along the way. I can work with the experienced investor and figuring out a strategy to get them to the closing table, even if I'm not representing them or not. We can work together to figure that out. So it doesn't worry me too much, but at the same time, yes, we want to make sure we set the proper expectations to them and say the 1 unit that is available is completely renovated. Like you got to know going in, hey, listen, just so you know, the other 3 units are in X condition. These are where the lease agreements are at. If you kind of give them information going in, even if they don't see the units or see all the lease agreements, like to me, they still have an understanding. So they're not really shocked when they're walking through and it's got 1990s cabinets and stuff like that. So, and hopefully they can make their offer based on that.
Okay.
Yeah.
Thank you.
Yeah.
For sure.
Thanks for asking the question.
I think it's really important to set realistic expectations and make sure that
Yeah.
your seller gets everything in order so that you can also, for like us, we can set a great package together for the listing and then
Mhm.
send that out to other investors because,
Yeah.
all investors are going to ask for financials and
Yeah.
rental lease
When we
agreement.
list properties, we try to get the rent rolls, the lease agreements all online in a package that we can send to every agent. That's very easy. The hardest thing is getting them in all the units.
Mhm.
I mean,
So,
realistically, yeah.
So something I've been, doing here and there on listings, especially if it's a nice buttoned up property, is doing listing inspections to offer to like upfront. Is that
Mhm.
something, since I don't do the sales side often, I will eventually when he wants to unload some of these C and D units and upgrade to Bs. But would you on an occupied, say 3 or 4 unit, do a pre-listing inspection to help get those closer to list price offers sight unseen, or do you think that that's disturbing the tenants for no real gain?
If this was 2, 3 years ago when money was cheap and it was 3.5, 4.5%, and anybody was snatching anything up they could possibly find, no, I'm not really worried about that. People probably weren't even having inspections. Now, moving into 2026, I suggested to almost every one of my clients. I've been talking to people about my single family homes that I'm selling. It's good to go get a pre-sale inspection, make people come through and take all the worry, all the questions away. So if you have an inspection, all the lease agreements buttoned up, they're getting to see some of the properties. There's really not much they have to worry about. They have to decide if the numbers work for them or not. And if they do, great, they're going to write an offer. So to me, I think it's great to go and spend the $500 and go get that inspection report. Now, if there's anything that comes up on that report, you go spend a couple $1,000s to go get it taken care of, and then you say, "Hey, here's the report, and by the way, 1, 2, 3 is already taken care of. Enjoy looking at the property." I think it's a great question, but also it's a great strategy for anybody that wants to sell their property. I highly suggest it. There's a lot of people that turn it down because they don't want to spend the extra $500. Totally get it. But me personally, even on my flip homes and everything, it's nice to know what you're getting into.
Mhm.
Yep.
Cool.
Hey, Kara, what's the next question?
Okay, so the next question, and this comes up a ton because people are
Yeah.
obviously always wanting to run their own rental comps.
Yeah.
So the big thing is, how do I run rental comps?
Yeah. I mean, so do you want to take that question?
Sure.
Yeah.
I personally use, whenever I do it, I use Renometer, but it's very, very important to take in other factors because Renometer doesn't know exactly all the aspects of that certain house. They're only pulling a few around. So it's really important to take in consideration the location. Is it on a busy road? The layout, is it ideal? Like, are a lot of people going to like that layout or is it very specific? And then updates. Is it updated? Does it look like the other rentals that are rented for the most in the neighborhood, or is it really outdated?
Yeah. I think one of the biggest things that I always say to people is, and I've got to preface this with, I've lived in some shitty places. I lived above a bar in a college town. Would I feel safe to live there personally? Like, would I bring my family there? And would I feel like, would I enjoy living in that property? Like at one point in my life, maybe not right now would I enjoy living in some of these properties that I own, but at one point in my life would I say, hey, yeah, I could see myself living there. If the answer is no, it's probably not a product for me because other people aren't going to want to rent it either. If the floor plan sucks, or if it's hard to get into the unit, or if it's on such a busy road that it's really noisy, or whatever it may be, would at one point in your life say, hey, I could see myself living there. It's probably going to be a more sought after property, and the rent's going to be what the comps are saying. Now, if it's a property that you're saying, it's a little quirky, the floors are slanted, the floor plan sucks, it's honestly not like the safest area, it's probably going to keep moving down rent wise and stuff. So I always think of that in myself is uh, when I'm at the property, how comfortable do I feel? Does it feel like a place that people would want to live?
For sure. And I think if you do have a property manager, always lean on them too, send it out to them and say, hey, like, what do you think that this would rent for? Because they're the absolute experts and, they're out in the rental market with showings and everything and hearing feedback of other renters. So I think it's important to also lean on them as well.
Agree. Agree.
Perfect. That's all I have from my clients. Do you have any other questions?
Oh, I do. Just on that one that you just talked about. So I've used Renometer a lot in the past, because as I said, my primary investors are buy and hold people. So that's really what I've got to use. Um, I hate feeding the evil beast, but I've also had a lot of success on some more nuanced ones on Zillow's rental calculator. And I oftentimes use them together if like I get a number out of one of them that seems like that's a little high. Do you guys ever use the Zillow rent calculator, rent estimator, or is that just a me thing?
I try to find as much information as possible. So to me, I want to cross-reference as much as possible because sometimes I think, like my property manager, Jackie Harshman, I'll ask her what it will rent for, and she uses this one system, and I think they produce. I think sometimes it's like really high and sometimes it's really low. Like I'll send her like, how is that even possible? There's no way. It's got to be $300 or $400 more than that. So, we'll go and check from other places, and then you got to go, use your eyeballs as well. But I think it's great to use multiple resources. When we say Rentometer is rentometer.com. They do have like a free version, and then they have a paid version where it's not very expensive. So if you're, running the comps like that, which I do like, but Zillow also has a spot for what the expected rent would be as well. So but yeah, I think is you can't gather too much information essentially, and I want everybody to make sure that they're realistic when they're looking at these prices. So if you think it's going to be $1,500 a month for rent for a unit, I would run the numbers as if you got 1,400, because right now we are seeing a little bit more vacancies. And so, you got a little bit more competition with open units. You might have to do things that maybe lowering it $100 or so. And I don't want you to make sure you run numbers on like the best case scenario. Let's run numbers on more of the worst case scenario.
Yeah,
Yeah.
and I also look at what is currently for lease right now on Zillow. So I use Zillow for that because, like, for example, Belmont area for us is like oversaturated with rentals right now. So I always look at that and see, oh, wow, there's a ton of rental listings in Belmont. So something to keep in mind for our clients looking in those areas, it's like it might take longer to rent that out. It might rent for less than the other ones because we have a ton of competition.
So, Carrie, you have rentals in Belmont. Do you have any vacancies right now?
No, and
Yeah.
I have a lot of clients having rentals. Now, I will say it took them longer to get them rented.
Mhm.
It did. And they have short-term rentals over there too that are doing great.
They're doing great. Okay, sounds good.
Yeah.
And that's also something to look at as well is looking at how many other properties are available at a certain moment. Because if you have leases that are coming up for renewal, you might not want to raise their rent if there's a bunch of vacancies in your area, because they leave. Now you're maybe be 2 or 3 months before you can get someone else back in there and stuff. So and just so everybody knows, we are talking about the state of Ohio. So things can be different state to state. So if you are watching this, we are only referencing the state of Ohio when it comes to investing. It's a very landlord friendly state. So some of the things that we might be saying might not apply to other states, but for the great state of Ohio, it's an absolutely fantastic place to invest. So, Kara, do you have any other questions that kind of came up?
No, that was it for this week.
Yeah, great. Well, all are welcome to join this Zoom call. It's every other Wednesday at 8:30. Every once a month, we will do a question and answering session. And then once a month, we will bring a guest on like Andy to talk about things that he's an expert in, like loans or anything. We might bring a property management company on, contractors are in the area, to make sure that you're constantly getting up to date information on what is happening in the state of Ohio when it comes to investing. So I'm Ryan Gillen. We've got Kara Ray on this call. Grant Flood, you heard from as well. He's in Columbus. Andy Payne is with Elite Capital with Kelsey Denman. So if you ever need to reach any of us, you can go to GillenGroupOhio.com. All of our information is on there. We would love to help you with your investing goals, your investing dreams, educate you any way possible. But we try to build long-term relationships with people where we don't just sell one property to you. We want to sell you 10, 20 because they're doing so well, and we build our portfolios up together. So we will see you guys in 2 weeks, and I'm looking forward to that next call. And if you have any questions out there, don't be afraid to message us. We would love to answer them to you personally, but also message to people that are also watching on YouTube, Instagram, and Facebook.
Yes.
All right. Have a good one.
Bye.
See you soon.